This is a market review for February 21st, 2025. As you can see today, we had a very, very bearish day. I believe there was 8:30 news. No, sorry, 9:45 red folder news, and then 10 o'clock orange folder news is what we had on Friday. Um, I'll be honest, today was the first day in a while that I was wrong. Going into today, I was wanting to lead a bullish bias, which obviously was not right. And now looking back, it was very much wrong, and there were signs of it, I just didn't see it. So, first off, this rejection here of this daily buy side imbalance, sell side inefficiency validated it, right? So it price acknowledged the gap right here by rejecting off of it right there. So in the future, I'm either looking for price to come back up into it. Well, let me say this. I'm definitely looking for price to come back up into this gap here. What I'm unsure about is whether it will use it as an inverse fair value gap or if it will once again break above this high and then come back down and use it as a reclaimed bullish fair value gap. So just a couple of things to look for in the future. So here I have 2 o'clock marked and 7 o'clock marked. Throughout this, I'll go over why I felt bullish, but why I was actually bearish. So first off, in hindsight, it's very easy to see that this right here was merely a sweep of liquidity to continue higher, right? So here, London was bullish, meaning New York should be bearish, which makes sense. We took out buy-side liquidity first with very, very unconvincing closures, and then we went to the downside. Now, in the 15-minute, if we look closer, what I thought was that, boom, we were bearish, we took out this low, and then we switched to bullish, which is correct, yes. However, this bearish move here was not a bearish trend, right? I guess the best way to say it is from 2 to 7, the trend of London session helps determine New York session. And this here is not a reversal of trend. The reason being is this 15-minute fair value gap. Price closes perfectly on constant encroachment of that. We did take out sell side, but wicks do the damage and the bodies of the candles tell the story. So this tells us that we are bullish, right? And so obviously pumped up, boom. So with London being bullish, we should have been looking for bearish. And with this expansion up here to take out this liquidity and kind of immediately get the heck out of there, made sense. Now looking more at, I'll actually keep those on. New York session kind of just immediately took off with 9 o'clock right here. Market opened and we just continued to head down, created this 15-minute fair value gap down here, which at 10:45, again, 10:30, 10:45 is the usual reversal point for AM session. Reversal, retrace, whatever you want to call it. It's the move that starts the time. It is the time where London lunch session, the move of lunch, I'm just going to restart all of that. 10:30 to 10:45 is usually the time when the move that is going to happen during lunch session, if you could call it a session, starts, right? Or the run on previously, it's a retrace. I'm not going to sound smart, it's a retrace. So here, 10:30, 10:45, we reversed here, retraced up to this 15-minute, and then you'll see on a lower time frame, but we showed unwillingness to continue higher. Because like I said, lunch usually looks to go the opposite way of AM session, which in this case, AM session was bearish, so lunch should have gone bullish to some degree. This retrace up here into internal liquidity was satisfactory for that, and as you can see on a lower time frame, which I'll get to, it showed that it does not want to continue higher, and so it continues lower. You can see here, this wick is right above this one, right as the algorithm kicks back in, which makes sense. And then we just ended the week down there. Now, with this sweep of liquidity up here, we swept it and then didn't really show intent to continue it. We had this last bullish candle, and we immediately broke below it. This closure right here, you could argue this one, but this one, in my opinion, definitely makes it an inverse. And this rejection here off of constant encroachment, given we didn't close outside of it, it's still a rejection in my mind. So this closure, and then come back up into it, constant encroachment here, and then we fall off of that lower. I'll get into my entry on the 1 minute. Here we can see that 15-minute, 10:45, right here, 10:40, 10:45. The retrace happens. Yeah, again, taps into the 15-minute. There's an SMT of these highs. I'll show that on the 1 minute time frame. Expand lower, 5-minute here, closures right on the bottom, another expansion, another up in this 5-minute here, constant encroachment, tumble. Algorithm kicks back in. It takes opposing liquidity before continuing AM sessions move. So in this case, it takes buy side liquidity before continuing lower. And that's this. And then we continue lower down here and then close off the week. All right. Again, this is all this. You can see not real intent to continue higher. One last pump. Boom, here, rejected, came down, closed up, constant encroachment down. Fair value up here right at 9:30. Another expansion lower. So my entry was based off a sweep of this low, right? AM session low, swept. Sorry, London session low, swept. And based off of what I thought I saw during London session, and I think on a higher time frame, we were in this hourly. We were below constant encroachment of this move. It all looked good. But obviously, that just goes to show you that with the wrong bias, even a good model can be wrong. So, bullish expansion. I saw this rejection here as a validation of it, of this gap here. Then I counted this as a closure, really shouldn't have, so I entered when this candle came back into it. But even if I did put my limit order there when this one closed, I'd still be wrong. And the reason I am wrong is because my bias was just incorrect. Now, if I was bearish, genuinely would not have known where to enter. All of this it's just tumbling. Not much to enter off of. Whole lot of consolidation here, a lot of wicks, not many inefficiencies. Little sweep of liquidity here. Boom, didn't validate this. Nothing. Just fair value gap lower. Again, reversal at 10:45. came up, retraced, hit it once, twice. Now, like I said earlier, lunch typically plays the opposing side that AM session did. AM session was bearish, so lunch is usually likely to play bullish. This 15-minute, as well as this SMT on these highs, shows an unwillingness to do so. So with an SMT of these highs inside this 1 minute fair value gap, this expansion here, trade could have been taken. Where? I'm not entirely sure. Yeah, I mean, this was validated here. So if this, with this closure, let's look at this high, 21,996.50, and we got this high, 21,996.50. So that wouldn't have tripped me in with this move here. This one would have, but after, sorry, this one would have, but after this expansion lower, I wouldn't have liked to see price come back up here. I would have been okay with it again because this 5 minute. But as far as taken trades, I don't know if there would have been one that I would be comfortable with. Another expansion, fair value gap, boom, retrace here below constant encroachment of the 5 minute expansion, fair value gap here, down again, retrace, algorithm kicks back in, come up, take out buy side liquidity or opposing liquidity since we're going to likely continue the AM session move, which was bearish today, or I guess yesterday. An SMT of these highs further confirms that. Then we get a validation with this wick and this one, in my opinion, because what happened here is price came down all the way to here, came up to here, closed, this candle opened, went all the way up here, and then all the way down. So in my opinion, this down to here is a rejection. So as soon as candle closed down here, my limit order would have been here, and this is something that I actually would have very much liked to enter. This is definitely the trade of the day, in my opinion. SMT validated inverse fair value gap after a sweep of opposing liquidity right after the algorithm kicks back in. Yeah, would it have been the fastest trade in the world? This is what, here's what it would have looked like. Limit order would have been there. Stop most likely would have been a constant encroachment. I would have targeted, I don't even know. Yeah, no clue what I would have targeted. 15 minute. Let's see. Where does that low fall? Where does this low fall? This one's too low. Okay. So that's too short. This probably would have been break even. This probably would have been finals, which wouldn't have gotten hit. I would have taken partials at a 1 to 2, roughly. Man, that really sucks. Let's see. Yeah, there's nowhere to take profits. There's any inefficiencies? Okay. Yep, we could have taken one there, there, or here, right? So profit 1 could have been here, profit 2 could have been here, profit 3 could have been here, and then 4, wherever that low was. But, so that definitely the trade of the day, in my opinion. Came down, swept this low, tiny retrace up to here, down one more, another retrace to the same one, closures below the fair value gap, we like to see that. And then we expand and then meander off for the week. Now, if we look at the weekly candle, we rejected after hitting constant encroachment of this wick. We have been in a high time frame consolidation, I'll call it, with these weeks. Would I be okay seeing a sell-off? Absolutely. On the monthly time frame, looks like we're just going to keep pumping. We have 1 week left in February. So from that standpoint, I'd like to play bullish. Uh, huh. I wonder what I'm looking at right now is this gap right here. Validated with this rejection up here. Closed below it, closed above it, closed in it here, but then we opened down here within this volume imbalance, played bullish. See, the monthly time frame has me looking more long term, right? I don't think we're going to see something like this. That's too much. That usually happens, I mean, you can see rarely, and it happens around very, very bad times. However, I think something like this is not out of the question. Just to take out this low, we might do that to take out this low, heck, even this low. But we could also continue higher. This could have 100% been a retrace week. Like I said, kind of been accumulating, got a motion to the upside. We closed at concrete encroachment of this wick. Heck, we even just touched the bottom of it. I'd be okay playing bullish. Again, validated here, so I'm looking at this as an inverse. Sorry, not an inverse, as a reclaimed bullish. So next week, to start the week, probably some bearish movement. To where, I don't know. Yeah, we'll see what happens Monday and Tuesday, but as of now, looking for those to be bearish, maybe take out this low, and then Wednesday, Thursday, Friday are bullish. However, what is also likely is, since this is validated, oops, let's just do it manually. This is a validated fair value gap. Monday, Tuesday could likely play bullish, run into this, and then get sent bearish for the rest of the week. Now, I'm okay with that. I think we're in a bit of a, I don't know what to call it, a mess right now, just horizontal since the middle of December. So for 2 months, we've just been consolidating. We need some sort of breakout. Finally took out these highs, relative equal highs, and then we were met with a big retrace. If we look at equilibrium, oops, sorry, this does support seeing Monday, Tuesday play bearish to reach equilibrium here, and then play bullish. So basically what all that meant is I could see it go either way. We're gonna have to see what happens Monday morning in London session to determine how we're gonna play New York session, and then see what Monday, Tuesday does to help us plan out the rest of the week. So this has been your market review for February 21st, 2025.